Hello, everybody. We are doing very well. Hope everybody's well. We just want to review the current situation in oil. Um, and as you know, the price of oil has been moving up dramatically over the last several months since January. So we are really great trend traders. So the impetus behind that is to follow the energy of the market. And we're looking here at the 4 hour chart. And as you can see, over the last 1, 2, 3, 4, 5, 6, 7 days, we've been bouncing around in a price channel between 64.88 and 63.23. Um, and there were several trades we took here. Let's see, basically going from demand to, I'll just draw that here, demand to support. That was a trade we took. Another trade here, demand to support. And then I was in on this trade from demand and now we're in a continuation trade. But the reason why you're not seeing, this full profit is because I rolled over the trade because we were in an expiration period from, we're in a new expiration cycle, M19. So I closed out that contract. I'm in the new contract. But how did we get into this trade? So we know we're in an uptrend. This is the 4 hour chart we're looking at. This is one of our entry charts. And we had a pullback here on the stochastic to support. In this case, we're looking at the demand zone. The 12-hour support range, let's just look at that right quick, was here at 61.93. Let's just outline that. This is the 12-hour range. We like that because it's so stable. And let's look back at the 4 hour. All right, so in an uptrend, you want to take the pullback to support. Okay, and in this case, here's the 12-hour support. Here's the demand level. Let's look at this on a 1 hour basis. Okay. Right. So we basically got in here at this previous lower day. So when the price retraced to the previous lower day, $1, which is the average true range, that was a good risk to reward scenario. To get below the 12-hour support level, you had to risk 168. Okay, so let me, from here to here, the market pulled back $1. And the average true range is like low right now, 1.01, I believe. So basically it retraced $1 to the previous lower day. And that was a good, entry level because most likely a lot of traders were looking at that level. So we entered long there, risking 168, and basically that trade is currently at a $2,200 profit. Now you're not seeing that now because I had to close out the previous contract, and then I bought this morning in this consolidation period. So I'm trying to follow the trade for what I think is going to be an extension move, because we've been in this consolidation move for several days. I think we're about to do an extension move. So I'm trailing on the 1 hour. and we're about 24 ticks up right now. So another thing I like to use is uh, the volume profile, and you can basically, I like to go back about 5 days, and you can see here that a volume profile is forming, and this is a high volume node right here, and there's also another high volume node here. So basically I'm trailing that volume. I want to be somewhere below this bulk of the volume. That's a lot of interest at these levels. So 65.50 is a good round number. So there's probably a lot of buy limit orders there, and this price will not penetrate through this level. It's just another way of looking at supply and demand. And that's pretty much where we are right now. And we are waiting for a extension move to happen. I think that's gonna be probably up another dollar or two on the next day. So we will check in soon. Hope everybody's doing well.